Hi, this is ProACT Sam. Welcome to this Living and Working Abroad vlog, where we're going to answer some clients' questions today, which we've received through our blog and social media, regarding how will the double taxation treaty, the new double taxation treaty between Cyprus and the UK, affect my overseas property and pensions. You can read and follow us on our vlogs, our blogs and our podcasts. So read, watch or listen to us and get access to these through our website at ProACTPartnership.com. And don't forget to like, share and comment our content to share it with friends and family, and leave us a question and we'll get back, and next time we could be featuring you. So let's jump into it now. How is my property rental income going to be affected by the new double taxation treaty is the first question. Well, property rental income is still treated as income for income tax purposes in both Cyprus and the UK. So whatever property rental you've got and declare is added to your income, whether it's earned or pension income, to work out what your highest tax rate is, up to 35% in Cyprus or 45% in the UK. Now, there's more to it than that. The way that the net income from property rentals is differently calculated in Cyprus and the UK, and there's also a slightly different treatment in the way that the personal allowances work. However, with common reporting standards, with exchange of information, it's important to know that if you're renting property, the bank or the property rental agent or the estate agent is registered and obliged to share that information with their local tax office, which will come back to your tax office of the country in which you're resident in. This is why banks, solicitors, accountants, estate agents are asking you for your tax number. There will be exchange of information, and the taxman will be to verify what income you've declared against what income others say that you've received. So we have to think about how we're going to present this information. So look at that. In Cyprus, you have a couple of advantages, is that pensions can be taxed separately to income, so it doesn't add to your a higher rate of income tax. So you can receive £17,000 of property rental income at the same time as only paying 5% flat rate on your pensions. Now, if you have overseas property in Cyprus, there is another way to own the capital. So in the UK, you have a personal allowance of 12,000. So if the total income is below 12,000, you won't pay any tax anyway. But if you've got UK income, earnings or pensions, then you're going to go over that level and potentially get taxed. Or if you're a pensioner, then again, your UK income could go over the tax level. So there's a way that you could hold your overseas property in Cyprus for the family or for the business and avoid paying tax on your personal income tax. Yes, it will be taxed, but what we do is we create a separate entity so that the family or the business own the property, but not as an individual. The family and the business still control the property, but it creates another tax entity, another set of tax allowances, and another way to reduce your overall tax bill. If you want to find out more about that, contact the ProACT Tax Saving Expat Experts at Living and Working Abroad page on Facebook or ProACTPartnership.com. The second question we've got is, will my public service pension be affected by the new double taxation treaty? Unfortunately, yes. This is the main change in the provisions. It's a standardised OECD set of rules that are coming in around the world, but any government income, any local authority income, any a government service income, any military income, for example, or a direct contract employed by the government, the government that's doing that is entitled to tax you in that country. So if the UK are paying their military in Cyprus, they will still be taxed as if they're in the UK. Now there are exemptions of that. If the UK employ a Cypriot in Cyprus, because they're a Cyprus resident and they're carrying out the work in the Cyprus on the sovereign basis here, then they will be taxed as a Cypriot. They'll be taxed locally. So the general principle is that if you're a national of the country in public service, whether it's a teacher, a local authority worker, a military personnel, or civil servant, then wherever you're working around the world, you will be paying tax as if you're in the UK. Now that is a fairly standard thing that's happened for people around the world over the last few years. But now it's also introduced into pensions. So anybody with a military or civil service or local authority pension will also be taxed in the UK first on that pension. So the good news is if you have the right mix of pensions, you can now earn up to £29,000 and live as an expat in Cyprus before you pay any tax, if you've got the right mix of pensions. But if you've got a public service pension below 12,000 to be taxed in the UK, you won't pay any tax at all. But if you've got a large single pension from the UK, from public service, then you will pay UK taxes on that wherever you live in the world. And there's also the consideration that you'll be once you get over £47,000 of income, you'll be paying high rate tax at 40%. So there's quite a lot of change going on there, and expats living and working abroad should review their pensions. And if you want to do a tax calculation to work out what your new tax rate will be, contact us at proactpartnership.com/contact us, and we'll get back to you and give you the guidance that you need. And we'll feature some examples in later vlogs and podcasts. The third question is I've heard that some public service pensions aren't taxed if you're a citizen of that country. Well, this is an interesting question. The wording of the double taxation treaty gives us a foundation, but it doesn't give us the case law. It doesn't give us the precedents by which the tax inspectors or the tribunals make their decisions and their interpretations. So what it does say in the double taxation between Cyprus and the UK is that if you are a worker and you live abroad and your nationality is a different country, then you can pay your tax for that employment from UK public service in that foreign country. Now, if you change and therefore it doesn't mean to say, it says that you're a citizen of that country. That doesn't mean to say that you have to be born in that country. So if you go to Cyprus, for example, to change your nationality to Cypriot by living here for more than 7 years, and then start working for the British government, just so you could avoid paying that tax on that income, that is not allowed. That's specifically not allowed on that employment income. However, that exclusion is not specifically allowed for on pension income. So if you're a pensioner that has lived and worked abroad for more than 7 years in Cyprus, or if you marry a foreign national and adopt their nationality, then in theory your nationality your citizenship is no longer British. Now, you could have dual citizenship, you may need to renounce that, but there's no specific provision at the moment. So there is a potential to make a claim to have your public service pension continue to be taxed in your expat country of residence in Cyprus and not pay tax on it. What that would need us to do is resubmit an application to the new double taxation treaty to say that this public service pension is for a Cyprus tax resident and that they have a Cyprus nationality with a passport. If you want to learn out more about how to get citizenship of Cyprus to give you an EU citizenship for your family or for your business and give you access to the whole of the EU without restriction for your business, for your service and for your travel, then contact us. And it could be as well that it allows your public service pension to be entirely taxed in Cyprus, where there's a flat rate of 5%. So for larger taxpayers, we put larger public service income taxpayers who face now a large UK tax bill, it could be a consideration and a way for them to go. There are other things you can do with public service pensions, and if you want to know more about that, please contact us at proactpartnership.com/contact us, and we'll get back to you and give you more insight. Thanks a lot for listening to this vlog. We hope you've enjoyed it and that you'll join us next time living and working abroad. Don't forget to like, share and comment on this and share the word and spread the word of living and working abroad for family and business. And we'll see you next time. Thank you very much. Bye bye.